Hi, this is Joe Betas. Welcome back to the Appraisal Toolbox for today's topic, which is overage rent. So overage rent is a situation where it normally applies to retail properties, where a tenant is going to pay additional rent, possibly, based on their volume of sales that they have over a given period. Now, in a situation where there is no overage rent provision, the development of the effective gross income might look like something that's on the screen now. And you'll notice that that's based on what? The size of the property and a rental rate. And that rental rate multiplied by the size of the property will determine the amount of rent that the tenant will be paying. Now, there's no uncertainty. That's a fixed amount. The tenant knows every year how much rent they're going to be paying to the landlord. However, in the case of an overage rent provision in the lease, the tenant will be paying possibly some additional rent. And how does that work? Well, in this example, we're going to call this example 1, we have a situation where what? Sales that exceed $500,000 by the tenant are going to be subject to a 3% overage calculation. So the first $500,000 or up to $500,000, there's no overage due. How does that look here? Well, if we take the first $500,000 sales and there's no overage rent due, what does that mean? Any amount of sales below $500,000, the tenant only pays the base rent. But once the amount of sales crosses what we refer to as the break point, every dollar above that amount is calculated based on what? The overage rent percentage. Okay, so let's take a look now at some examples here of what the sales volume might be for our tenant. And these are all over the board, basically from $100,000 up to $2 million. But the point here is that for any given amount of sales, if we subtract out the break point, that will give us the amount of the sales volume that is subject to the overage calculation. And if we multiply that by the overage amount or the overage percentage amount, that'll give us the amount of rent due. So let's take a look at an example. If sales are going to be $700,000 for this tenant, the $700,000 is the gross amount of the sales. We subtract out the break point, the $500,000, and that leaves us $200,000 of an amount of sales that are subject to the calculation. If we multiply that by the rate, that gives us additional rent or overage rent due of $6,000. Now, we can go ahead and take a look at another example. This time we have $1.5 million of sales. Subtract out again the breakpoint amount. That gives us the amount that is subject to the calculation. Multiply that by the 3%, and in this particular instance, we would have $30,000 of overage rent due. Now, where these problems get a little tricky is if we have multiple tiers of sales and we have changing percentages that apply to the volume of sales. So let's take a look at an example here. If the sales volume is $600,000 or less, that's this category right here, there's no overage rent due. Okay? However, as soon as the sales exceed $600,000 and up to $900,000 in sales, we're going to have 4% of that amount due. And then finally, any sales that are above the $900,000 is what? Calculated, that rent or the additional rent or overage rent is calculated at 2.5%. So if we had $1,150,000 of sales, let's slot in our levels or volumes of sales to where they belong. The first $600,000, no overage rent due. So think of this, if we took away the 600 from here, because that's what falls into the first slot, we have $550,000 of sales volume that is unaccounted for right now. But we know the next 300 of sales volume goes in here. So let's take that $300,000, and now we've accounted for what? $900,000. So if we subtract $900,000, we have $250,000 remaining, right? And that $250,000 is going to be slotted where? In the 2.5% category. All right. And once we have all three of those amounts, we can then calculate out the overage amount, right? The first $600,000, no, nothing due, no overage. The 4% provides $12,000 of additional rent. And the 2.5% times the $250,000 provides an additional $6,250 for a total rent of $18,250 of overage rent. Okay, so that's it for today's topic. If you go to our website, it's on the screen now. You'll see all kinds of additional resources on this topic as well as many other, including some practice problems. So thank you for joining us today. And if you have any additional questions or topics you'd like us to cover, please drop us a line or leave us a note at our website, and we'll be happy to take a look at them for you. Thanks again.